Now, ladies and gentlemen, we come to the final presentation on the topic, creating wealth with an expertise of inflection point investing in unlisted gems, and that is going to be delivered by Mr. Nishad Khanolkar, President of Bharat Value Fund, Pantomath Group. And this topic centers on the strategic identification of crucial market shifts that create significant investment opportunities. Inflection point investing allows investors to pinpoint moments when companies or sectors undergo transformative changes, resulting in accelerated growth potential. And a key concept in this approach is J-curve investing, which depicts how investments in mid-stage and late-stage private equity may initially experience losses or stagnant returns before realizing substantial capital appreciation as companies undergo restructuring and achieve growth. Now, this effect highlights the potential for significant returns over time as these investments mature as well as stabilize. I'm going to be inviting Mr. Nishad Khanolkar, who is a chartered accountant and CPA from Australia. And he's going to give us his insights into this strategy, and they're going to be particularly valuable for investors looking to navigate the complexities of private equity investing in mid-market opportunities. By focusing on the potential of companies at critical junctures, such as those approaching an IPO or those undergoing transformative changes, investors can strategically position themselves to capture exceptional returns. His expertise in managing the Bharat Value Fund, which targets mid-market pre-IPO investments, underscores the importance of leveraging inflection points to create substantial wealth for investors. So here's a fund manager, ladies and gentlemen, who had the fastest close and fastest returns in India. I'm going to call him on stage now, Mr. Nishad Khanolkar. Let's welcome him with a round of applause. There he is. And Mr. Manocha has something to say at this juncture.
So we have specifically kept this session in the end because this is going to be most interesting session. You know, all of us want to make returns in unlisted equities, and unlisted equities is a world which today is, you know, I would say flourishing very well, but difficult to tap. We hear a lot of stories of unlisted stocks, you know, reaping returns like 10x, 20x, 30x, but, you know, who is practically actually executing it? This is what will be covered in this session. I am personally invested in, you know, both of their funds from our company, and a lot of our clients who are sitting there have an exposure. Obviously, you know, I am equally keen like you, always learning, wanting to understand myself. So I'll myself also be attending this session. All the best to you, Nishad.
One second, Kamal bhai, 1 second. Am I audible? Sorry, thanks. So normally a thanks note is given towards the end of the presentation, but permit me to give the thanks note at the start of the presentation. So as you all know, Pantomath has always been a darling baby of the institutional investors. And when I met Kamal bhai almost 1.5 years ago, he was the one to push me that if you really want to have a big doing into the fund management business, you really need to have the support of retail and so-called HNI. Retail is a wrong word to use, HNI investors. I was not really sure what Kamal bhai was saying, and I trusted him. And to be very honest, ma'am has recently said that one of the fastest subscribing fund in India. Let me tell you, by the time institutions were considering to invest, retailers have occupied all 999 seats. So that is the outcome, and 40% to 50% crowd sitting over here have already invested in me. So thanks to Kamal bhai, I am giving this thank you note at the start of my presentation rather than giving at the end of the presentation. So because of Kamal bhai, ultimately, we had institutional present, but now we are big time into the HNI segment also. So you all know it is a category 2 AIF, Bharat Value Fund. When I came here, the good thing is that most of the investors welcome me. So happy to see that rather than me explaining my fund to my investors, today our investors are explaining the fund to their friends. So which is a good thing about this thing. Very clearly, what you should expect from me. I always try to give my presentation in a pointer format. So first point, I'm going to explain you about the background about the group. What is the background about the group and how the background of the group helps me in generating the alpha that Kamal bhai has just spoken 2 minutes ago. So that's first point. The second point, I would touch base upon the positioning of the fund. Once I explain the positioning of the fund, I believe 70 to 80% doubts would be straight away clear. The third point, I would be telling you about the strategy of the fund, what exactly the fund is all about, where do we exit, how do we enter, where do we enter, how do we make money, most important, and what is the safe point. So this is the 3 points in I would like to cover my presentation. And then lastly, in the fourth, I would tell you what you should expect from me and what you should not expect from me. So that I have to clear very well. So first thing is first, what is Pantomath Group? So Pantomath Group, I'm going to keep it in a very non-technical way. That is what Kamal and his team has asked me, because whenever the fund managers get the mic, they have tendency to speak in a technical way. So I'm going to speak in a technical, non-technical way. So what is Pantomath Group? In a simple word, Pantomath is India's largest mid-market merchant bank. What is merchant bank? Merchant bank is the license issued by regulators to do IPO. Any IPO you want to do, 50 crore or 5,000 crore, you have to have the merchant bank. In a simple way, merchant bank is a Rohit Sharma of IPO. IPO happens good, nobody gives you credit. IPO does not go well, you are the first person to be blamed. So what Pantomath has achieved? Pantomath has executed 111 IPOs in last exactly 10 years. 111 plus 5 to be in pipeline. So if those go successful, we are 116. What does it mean? Very clear. If you want to bring the IPO on a main board, whatever is the size of the IPO, the 30% has to be given to the big boys. Who are the big boys? Number one, banks, insurance companies, and mutual funds. If you fail to give it to these people, you cannot bring your IPO. So what does it indicate? Invariably, India's top banks, institutions, and mutual funds have repeatedly invested in the IPOs done by Pantomath. Otherwise, this is not possible. If somebody is bringing 111 IPOs back to back, that means almost a IPO per month. That means you are generating wealth for your investors. So that all information is in a public domain. So basically, I have 4 arms which support my fund. So my biggest arm is basically my IPO making capacity. My second arm is, most of you from Bombay would know, Asit C. Mehta. It is one of the oldest broking house in India. It is headed by the first and the only lady chairman of Bombay Stock Exchange. As we speak, Pantomath has 53% stake into Asit C. Mehta. What does Asit Mehta give to the Pantomath Group? Very simple. Asit C. Mehta has given a ready-made post-IPO presence to Pantomath Group. Because of their 40 years legacy, each and every institution of India is well associated with Asit C. Mehta. So my pillar number 1, extremely well, he knows how to take a mid-sized company to the IPO. Pillar number 2, knows how to monitor that company post-IPO. Is that sufficient to run the fund? One is champion of pre-IPO, another one is a champion of post-IPO. That indicates we have a 360-degree cycle. The answer is no. Can we move with these two? No. What we realized when we had the first fund where Kamal has invested, probably, okay, I understand we are the new, but then we realized that if you really want to go deep into this fund management structure, then we really need to have the support of artificial intelligence. So before I talk about our investment into artificial intelligence, let me make one thing very clear. The contours of the fund does not believe in investing into artificial intelligence. We believe in investing into traditional assets. But to grow my investing company, I need to have the support of artificial intelligence. So my AI tool owned by me, first AI tool, analyst.ai. Listed company, any information you wanted to know, there are hundreds of apps, click the button, you will get to know. Unlisted company, will you get? Very tough. Right to Information Act, thanks to Indian media, Right to Information Act has become very important in India. Very transparent. Whatever information in a government domain, you have right to know this unless it is classified. Analyst.ai within 10 minutes can tell me the health of any unlisted company. Most of the guys, 40% to 50% sitting over here are investors to my fund. They are complaining me why your drawdown is faster. Why my drawdown is faster? Because of analyst.ai. What people can do it in 3 months, 4 months, I can get a complete 60, 70 page report of an unlisted company in less than 10 minutes. Be their GST default, TDS default, criminal liability against the company, charges against the promoters, everything I come to know in less than 10 minutes. That's my homegrown AI. That not only helps me, that helps my investing company also. How? Let me tell you. Today you invest into any company. Everything is perfect, all good, 90% marks. Can you guarantee that tomorrow unintentionally promoter will not take any wrong credit call? It so happen. Unintentionally, you all are businessmen. In your business, unintentionally you take a wrong credit call and the entire balance sheet turns from green to red. One wrong mistake. How do you stop it? Analyst.ai. What your DD agencies cannot do, what your due diligence agencies cannot do, that analyst.ai does. So all my investing company have to mandatorily take the cognizance of analyst.ai if they are buying or supplying anything more than 3% to their vendors. or supplies. So what does analyst.ai tell me? Analyst.ai in short tell me the threat that is coming my way much in advance. This is how I not only protect my investing company's interest, but I protect my personal interest also. So that's my AI. The second AI is, of course, the lead gen. Look at the clients who are seeking their support. What is lead gen? As the name suggests, lead gen is the lead generating ability tool. Simple, eh? Any business, it could be your business, my business, this hotel's business, Kamalji's business. If you wish to grow the business, you need to have the data with pinpoint accuracy. If you do not have the data with pinpoint accuracy, you cannot grow in your life. So basically, my target segment, my investing companies are mid-market companies. What LeadZen does, LeadZen helps them in providing the data with pinpoint accuracy. One of my company, when we invested in them, they are supplying to only 2 northern states. Today, they are supplying to 12 states in India within a span of 6 months. How? Because LeadZen exactly told them not only the names of the distributors. See, having a data of distributors and having a data of distributors who have money in their pocket is a big difference. If LeadZen can tell you exactly, go and supply to this guy, iski jeb mein paisa hai, you can sell the matter. So probably you can say that Kamal is the LeadZen between you and me. Today, you are meeting me because of Kamal. So remove that human element of a Kamal and the balance in LeadZen. So these are my 4 support system. My first part is over. How and who helps my fund? First is Pantomath Group, which is extremely good. He knows how to convert an unlisted company, a mid-size unlisted company into India, probably the best in India. The second one is Asit Mehta, who knows how to take care of the company post-IPO. Third is Analyst.ai, which tells me the threat that is coming to my way. It's not only about the art and science of investing, it's the art and science of growth also. So that's where Analyst.ai and the LeadZen, which helps me in growing my business. So these are the 4 pillars of my presentation or my fund. They have been supporting me. My first part is over. The second part is very simple, the positioning of the fund. It's very simple, one line. This point is called as the point of IPO. Okay, this point is called as the point of IPO. Simple, the left side is the pre-IPO, right side is the post-IPO. Where do I invest? Simple, in and out strategy. Invest in those companies which are IPOable in next 18 to 24 months. Frankly speaking, I do not know why Kamal asked me to speak for 30 minutes. My presentation is over. I have nothing to say beyond this. That's clear in and out strategy. Friends, let me tell you, I do not know how many unlisted stocks you have been investing. Every day the new unlisted stocks are coming into the market. But please, please, please note one thing. In this segment, if you try to chase the return, I give it to you in writing, the exits will never come. What does it mean? Paper pe dekhega 6x, 7x, 8x, bank account mein 0x. That means you are chasing the returns. Do not chase return. Chase exit, returns will come in your bank account. That is the reason I say invest in those companies which are IPOable in next 2 to 3 years time. Means I'm talking about exit, not entry. This fund will only talk one line, is that is about exit. One of the investors sitting over here, I could not spot him when I came. He only said, exit wala aa gaya. And that is how we are. This is completely an exit-oriented fund. So simple, my second part is over. I have clearly mentioned my strategy of the fund. Since Kamal has given me a good 20-25 minutes, so I have to do the honors. He's paying for this. So let me speak a little bit more about this. So what is my strategy? Why this is an exit-oriented fund? I'm going to keep it very simple. Only 2 points. Where do I exit? Where do I enter? Things would be very simple. I'm not trying to sell here anything. I'm just trying to sell the concept. So why this is an exit-oriented fund? For a simple reason. This point, the point of IPO. In the history of any company, the most liquid event of any company is the point of IPO. In the middle of Corona, when the market fell one stroke down, no stock fell more than 25% on a single day. But on the date of IPO, 25% of your stock, somebody is buying, somebody is selling. What does it mean? Simple, first chapter of economics, demand supply. We are not managing this fund like a fund managers. If we'll manage this fund like a fund managers, we are like the rest of the others. We are managing this fund like a businessman. What does businessman do? Businessmen try to sell the product where either void is there or either demand supply gap is in your favor. On this day, demand supply gap is in my favor. When whole world is trying to enter, I'm sure all of you sitting over here must have applied for 20 IPOs in last 2 years. I'm not even asking without getting even a single allotment. I know that. I know that because 40% of a crowd is my investors only, so I know where do you apply. So basically, point is get out on the date of IPO. Be in a position to get out on the date of IPO. When whole world is trying to enter, you get out. Demand supplies in your favor. Simple first chapter of economics, 11 standard. So what is happening? Second, on this date, try to keep the valuation or the within budget of India. What does it mean? Each and everything, again, simple concept of keep it like a businessman. Each and everything you sell, businessman sells their product. Try to sell within budget of India. Try to sell within budget of India. I do not know, people talk about unlisted companies having a valuation of 80,000 crore, 90,000 crore, 1 lakh crore. When is the last time we have seen such a big IPO in India? Let me ask you a simple question. Last 3 years, India is the fourth largest economy, soon going to become the third largest economy. How many IPOs above 5,000 crore India has seen in last 3 years successful? Not even 10. I'll slightly tweak the question. How many IPOs less than 3,500 crore India has seen successful in last 3 years? The answer is more than 150 or 200. What does it mean? Try to sell within budget of India. Don't try to chase the two big dreams. Do not try to chase the two big dreams. You may or may not be successful. If you try to sell the product within budget of India, it gets sold. Again, I'm telling you, I'm not talking like a fund manager. I'm talking like a businessman. And the third point, we know how to do this an event. I am not dependent on third party. Again, I repeat, the kind of business I am, if I could not exit, there is no value. That is the reason, rather than starting from the entry, the typical fund management concept is enter the company, nurture the company, and exit the company. But I did not start from the entry. I straight away started from the exit. Because I already spot the exit, and if exit is there, then only I enter. So 3 reasons, simple. Get out within budget of India, point number 1. Get out when market condition, demand supplies in your favor. And most important, I know how to do that event. I'm not dependent on third party. So that is how I exit. Now let's see how do we enter. So where is this fund position once again? There is a one universe which is the startup of India. I know I cannot speak even a word against startup, otherwise you guys will kill me because this is the India's capital of startup. So I'm not going to do that. But there are certain challenges. I will not use the word risk. Challenges with regards to investing into startups. And there is one universe which is called as a listed universe. So between startup and listed, there is a universe which is called as a unlisted to be listed. So where do I invest? I have done 111 IPOs, but can I bring a startup IPO in next 3 years? The probability is not. Probability is not. So basically, I have 4 strong points of investment, which we always consider. First point, invest only into, try to invest maximum money into the asset-backed company, means brick and mortar. Why? Simple concept. Educated investors may understand, because see, if you want to bring the IPO, you cannot have 2 investors and bring the IPO. You have to bring the HNS, you have to bring the retailers, you have to bring the institution. The entire ball game keeping in mind that. The ball game is not keeping in mind the entry. I am not entering where I am entering. I am entering where I can exit. That is the psychology. So can I bring 2 investors and bring the IPO? 100% not. 100% not. So जो दिखता है वो बिकता है, you buy what you see. I do not have to explain anybody about the asset-backed company. Everybody understands, everybody apply. As simple as that. Asset-backed company, easily IPOable. No brainer. Simple. Keep it simple. Second, when you invest the company, neither take too startup nor too big. What does it mean? Keep the company in the top line, जिसको बोलते हैं, revenue बोलते हैं, in the range of 400-500 crore and less than 2,000 crore. Why? Simple. Zero manufacturing I'm talking about. I'm not talking about trading and manufacturing. Trading and retail. Trading and retail, maybe you can achieve the turnover of 500 within no time. Fintech you can achieve within 6 months. But in manufacturing, if you're achieving a turnover of 400-500 crore, friends, believe me, the promoter has got the pulse of the business. Am I here to educate promoter on running the business? No, I cannot do that. So once he has got the pulse of the business, that time you give him 3 things. Number 1, money, which I have. Number 2, artificial intelligence, which I have. And number 3, corporate governance. In 3 years, he can help you in increasing the balance sheet. What am I talking over here? So one of the rare fund managers who will never talk about the valuation, he will always talk about the balance sheet. Because I know one thing, if I try to double the balance sheet, the valuation goes 4 times. That whole world knows. And if you try to triple the balance sheet, the valuation goes 6 times. So try to attack on the concept. 400-500 crore company, the promoter has already achieved the revenue in a manufacturing. Give him money, give him AI, give him corporate governance. In 3 years, he will double the balance sheet. In our case, it happens in 1.5 years. The evidence is sitting in front of me. When 50% of guys sitting over here are my investors, I cannot bluff. So that is how invest in a grown-up company, but not too grown-up company. देखो $1 billion company you cannot make 2 billion. But a 300, 400 crore company you can easily double in 3 years times. That is the simple concept I'm doing. The third concept, slightly technical. The day you bring the IPO, most of the guys here for mutual fund and PMS were there. You have to give a benchmark. Means price discovery kaise hoti hai? You have to give a benchmark. On that day, if you try to give him the benchmark based on P multiple, the product is sold within 24 hours. 24 hours. The problem is that P multiple can be spoken by only those guys who have profit after tax. Most of the unlisted stocks in India, I am not against that point to be noted, but they do not know what is EBITDA. Forget PAT. So friends, very simple. When you have to sell on P multiple, buy also on a P multiple. Probably very rarely somebody from an unlisted segment would come and openly talk about the P multiple. I have guts to do that. Because I can openly tell, till today, whatever investments I have done, the weighted average P multiple of my entry point is in the range of 13 and 14. And you all know IPOs are not coming below P multiple of 30. So what does this indicate? 30 exit, 13 entry. 30 divided by 13. The concept is important, number is not important. 2x, 2.5x is the entry level delta we have created. There's only one way you can make the money in fund management, and that is enter low. There is no second concept. You cannot enter at 7 times of revenue, 8 times of revenue. The current unlisted stocks trading into the market, if you see, you are buying because A is selling at 300, B is selling at 317. Moment C gives you 290, you invest, but you do not look at what is the revenue multiple. The only way to make money is by enter low. If you are entering in any company, good company at a 12, 13, 14 P, even if the going gets tough, you can make the money. So what am I trying to do? People say in fund management, you make money on the date of exit. My 21 experience, including international experiences, says no, that's not the right statement. On the date of exit, friends, you only execute the transaction. Money is made on the date of entry. The only way to make the money is enter low, and there is no second funda to that. Believe me, India is not going to see the IPO at a P multiple of 15. That's not going to happen. 30 may come down to 25, that's okay. But not below that. So that is what the element, so what have I done? The day I enter, I have created the element of safety. You do any business, again, let's talk like a businessman. You are buying something, selling something. The gap has to be there. If the gap is out there, you cannot sell. Then you are expecting that the sale price will go up. Do not expect. Then you are speculating. This is a clear-cut funda. You are entering at 13, 14, 15. The market is available at 30. Straight gap. That's point number 3. My fourth point, most of the companies we have invested, again, we try to give a lot of emphasis on promoter shareholding. In my case, most of the companies, we believe that the promoter should have substantial shareholding. How much? Minimum 90%. Why? 2 reasons. Point number 1, heavily diluted companies are slightly difficult to IPO. And second thing, you all know all private equity investors have plan B. Plan B is क्या होता है? Plan B यही है कि भाई promoter buyback करेगा. Imagine a promoter having 20% shareholding and you are expecting him to buy back. Nonsense, man, it will not going to happen. Don't even expect that to happen. But promoter having 90% stake into the business, the probability of him buying you back is relatively higher. So the 4 hard points are asset-backed company, point number 1, PAT positive, point number 2, promoter 90%, point number 3, and grown-up company, point number 4. These are my hard facts. The softer facts are certain things you need to necessarily avoid in India while investing, and those are avoid companies where promoter having multiple books of accounts. Typical problem in Indian unlisted stock. Promoter running manufacturing of this unit, he's running company A, company B, company C, company D. Never do that. Never do that. Second, no misunderstanding if you're done. Father is running A business, son is running B business. As per the fund manager, that is a death trap. In most of my investing company, father and son is into the business. Why this point is important? Very important. Again, let's talk like a businessman. I do not believe there is something called as a watertight agreement. Sorry to the lawyers sitting in this room. There is nothing called as a watertight agreement. If the mind mapping is there, technically you do not need the agreement. If the promoter is 90%, he has put his sweat into the business. He has developed company to the extent of 500 crore. His second generation is into the business. What does it indicate to you? It indicates he is in the business of wealth generation, also called as alpha generation. He is into the business of wealth generation. When he is into the business of wealth generation, and I am also into the business of wealth generation, my mind mapping happen. But imagine if the promoter having 30% means he is into the business of exit. If he's into the business of exit and I'm into the business of wealth generation, that is not going to happen. Then you have watertight agreement, it has no meaning. So mind mapping is very important. I'm playing on the mind mapping of the company. And the third point, softer point is, life में दो चीज़ होती है, या तो टैक्स की चोरी करो, you are allowed to do that, या तो वैल्यूएशन का गेम खेलो. You want to do the tax की चोरी, please do it, then I am not your partner. You want to play the valuation, please learn to pay taxes. The day we communicate promoters, brother, please give me 1 rupee profit after tax, I will give you assured minimum 25 times return. That day profit gets out from the drawer and sits into a balance sheet. I only want that. No wonder my each and every company has doubled the PAT in 1 year. Double the PAT in 1 year. Again, 40% guys are sitting here are my investors. सिर्फ communicate करना है आपको. 10 years family run businesses, 500 crore top line you want to achieve in manufacturing is not less than 7 to 10 years affair. रिटेल में हो सकता है, फिनटेक में हो सकता है, मैन्युफैक्चरिंग में नहीं होता है. 10 साल धंधा कर रहे हैं एंड यू मीन टू से दे आर रनिंग एट लॉसेस, नॉनसेंस, इट्स नॉट गोइंग टू हैपन. Only thing you need to have mindset to tell them. Once you educate them, the profit straight away comes into the balance sheet. The moment profit comes into the balance sheet, we are there to milk the money out of that. So friends, I know I have tried to do it in a non-technical way, but what am I doing? In a simple way. As a businessman, you always dream that you should have a rich buyer and your buyer should have the appetite to buy. If you have these two things, your product is going to get sold. So whom am I selling my product? I am selling my product to the richest guys of India, and they are not Mr. Adani and Mr. Ambani. They are the people who have given presentations before me since morning. They are all are my buyers. Mutual fund, insurance companies, banks. How big they are? $3 billion check they get at the start of every month. What is their problem? Unlisted, they cannot invest. Out of country, they can invest, but they are not going to invest because India is generating the better alpha, so-called. So the earliest point they are investing is the point of IPO. Their earliest point is my last point. Whatever they buy here, am I selling them for the first time in my life? 100% not. It's a daily affair for me. So I exactly know what they buy here. Whatever they buy here, I buy 2 years before them. Put them in a process called as IPO. तो मैं आपको process का पैसा कमा के दे रहा हूँ, speculation का नहीं. Speculation तो starts from here. So buy 2 years before them, put them in a process called as IPO, give it to the big boys and get out. Don't try to have the food with them. They are locked in only for 90 days. On 91st day, they have license and liberty to sell. Most of the IPOs come below after IPO because on 91st day, anchor leaves. So that is called natural safety. So what you are trying to do, understand, the big boys comes over here. Promoter 90, you are 10. Big boys are locked in for 90 days from here. Who will sell from the point of IPO till 91st day? Nobody. Why most of the IPO come down from the IPO date? Because people who have bought before IPO, they start selling. Tuck, 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 tuck. There is no seller. Promoter is 90, I am 10. There is no seller. Technically, I am becoming a first checker in a grown-up company. So that's called 90 days exit. So get out as long as somebody is into buy, locked in. That's called simple in and out strategy. So few things I want you to summarize way. We can talk endless on this, but few things I want to make very clear what you should expect from me and what you should not expect from me without any setting anything against anybody. All the segments and all the sectors are always good, but I am only talking from my fund point of view. So there are various unlisted stocks are trading into the market. I am not against that. But if you are thinking or if you have come to this presentation that expecting कि वो आपको मिल नहीं रहा है और निशाद आपको देगा, then you are staying in a fool's paradise. That's not going to happen with me. The unlisted stocks which are easily tradable into the market, if you want them, please do not come to me. I am not going to have that because I become a first check cutter in a grown-up organization. Kamal has asked me to make one statement, so I am just making on his behalf, that most of the unlisted stock trading into the market have invariably delayed in their IPO. Invariably. Why? Simple question, why? You only ask to yourself, if unlisted stock is coming into the market, who has introduced this? Who has introduced? Promoter. Promoter only. Why is he giving this stock to you? Simple question. When IPO is there, IPO is a liquid market, why is he giving it to you? And that's secondary sell, not primary sell. Don't tell me he wants money. Most of the unlisted stock you buy are secondary. That means he doesn't want money into the organization. When IPO liquid market is there, why is he giving before you? Simple. He knows IPO is not coming on time. I have 16 companies. Buy one stock from one investee company. You cannot. You cannot. In none of my investee company, I have more than 3 investors. What does it mean? Friends, I always tell, IPO is like a bridge and investors are like a car. Why there is a bottleneck on the bridge? More number of cars. If I'm keeping not more than 3 or 4 investors, in none of my investee company, I have more than 3 or 4 investors. The average valuation of each investee company is in excess of 2,000 crore. What does it mean? The day bridge opens, I'm going to the first person to climb that bridge. If something happens, I'm standing there. The first guy to exit. That is called as operating an exit-oriented funds, my friend. That is called. So if you want to invest into the unlisted stocks which are otherwise trading into the market, somebody offering 300, other guy offering 310. If you expect Nishad is here to offer 290, do not even call me. That's not in my agenda. But most of the companies which you have applied in last 2 years and you have not got it, if you want to become a part of those stories, please come here. That is something what I'm going to offer you. That's point number 1. That you should expect from me. Second, why people are investing in my fund. The basics of investment is get out from the all-time high P multiple and get into the all-time high P multiple. Again, you do not have to do a chartered accountancy for this. This is a first chapter of 11th standard. Now, listed में तो all-time low P multiple है नहीं. Everything is trading high and high. And unlisted में just call me next time when you hear some fund manager coming and talking about the P multiple. Nobody talks about P multiple because most of the guys have invested into the loss-making companies. If I'm not mistaken, 90% of them. So simple hai, if I have made one IPO at a P multiple of 32 and I'm investing in his competitor P multiple of 10, eventually I can bring IPO either 28 or 26 or 25. But if that listed falls from 32 to 25, you have to straight register the loss. But here the margin of safety has been created. So what people like in my fund is get out from the all-time high P multiple and get in the all-time low P multiple. Ultimately, you will land up there only. If my competitor is trading at a 32 P multiple, I cannot bring the IPO at 42 P multiple. It is impossible. But if I'm entering at 10 or 15, I have the margin of safety. That is something what people have liked in my fund. So this is the thing that I wanted to highlight you. So we had recently closed our funds. I can talk endless, but if anybody wants to ask any questions, I'm happy to answer that. So otherwise, we can take this question after also. I don't know, Ritika is there. Ritika, if the time is over, you want to? Endless ho jayega. Anybody? Either everybody has understood everything, that's why they are not asking the question, or nobody has understood anything. No, sir, unfortunately, that has never happened. Never happened. What happens is that, try to understand what is the mandate of regulators. Regulators are sitting there to bring the IPO, not to fail the IPO. Because what am I doing? I am preparing their food. If the IPO doesn't come, sorry to say, the mutual fund industry will have tough to go. 22,000 crores coming at the start of every month. They have to repeatedly invest in those 300, 400, 500 companies. Demand, supply. 22,000 crore aa raha hai, that's supply. Demand is new IPO. Supply is more, demand is less. That is the reason price is going up. Why P multiple is going up? Why P multiple is going up and up and up again? Because 22,000 is not going low. Every month it is going up, and comparatively those many IPOs are not coming into the system. So the money is falling into those kind of companies again and again and again. So that is the reason. But only thing is that regulators is very clear. Don't bring any nonsensical things. Bring a well-compliant company. तो हो जाता है. Plus or minus cyclical events can hit you. The good thing about India is the cycles have gone down. That is what all the people have. 5-6 people gave presentation before me. Everybody said the same thing. The cycle का period जो है India में, that has gone down because nowadays India is heavily dependent upon the domestic money and the overseas, not on the overseas money. I'm sure all 5-6 guys spoke before me. They made the same statement, and I'm taking the benefit of that. So always this kind of an industry, 2-3 months up and down in the bringing the IPO. That's always possible. But otherwise there are no failures.
I mean. Another question was, again me, it is not related exactly to the fund, but we saw a meme a few days ago regarding the Yamaha showroom IPO. The 12 crore IPO was oversubscribed and it was 4,800 crore was the subscription amount. So regulators, are they really doing their job?
Sir, sorry, unfortunately, I'm talking about the main board IPOs. You will not get such a stories in main board. In SME, you can always keep on getting such kind of a stories. So again, I say, sir, on the contrary, I would ask you a ulta question. Please no misunderstanding. Suppose you are a boss of a, say, a CIO of a mutual fund industry, and I bring you a company having, say, typical my criteria, 2,000 crore top line, asset back, you can see the investments, PAT positive, promoter is 90%. I'm sure, so you would consider investing. Then this question will not come. What happens, sir? Today, anything and everything is getting sold. You do not have to put the brain. But when the going gets tough, only the better assets get sold. So even in this market, we are investing into the better assets. That's what gives us an edge over rest of the people. I hope I have answered your question, sir.
Yeah.
Thanks, sir. Yes, sir. Yeah, 100%, many people. So what happens, sir? Most of the companies, so we have a typical clause of buyback clause. Of course, I don't want to get deep into this. So recently I made one, Kamalji said, recently I made one exit at a 10x. So that company, we wanted to hit the IPO. We wanted to hit the IPO, but one of the late stage fund came and said this, that, can we buy you? Because if I hit the IPO, invariably the late stage fund, they fail to get it. Because then the mutual funds supersede them. So that is the reason late stage fund को well complied company मिलती है. What is the well complied? If Pantomath is sitting in one company for 2 years, a whole world knows that the company is well complied. So most of the time this happens. Even before we go for the IPO, late stage fund do buy us. This is happening. This is a common scenario, sir.
You exit on the day one of IPO?
So what
Listing?
in my technical term is that it is called as a, okay, we put ourselves in a condition because most of the unlisted stock you apply, you hit a lock-in. So we are, it is called as a OFA. So for example, if you are applying for the IPO, which you do not get, but if you get, then you are putting, so somebody is buying, somebody is selling. So the buyer is you, seller is me. You are putting money into the IPO. If you get an allotment, either it is a OFS or it is a fresh issue. There is only two kind of a thing. Fresh issue means money is going into the company. OFS means some existing investor is selling. So if you got the allotment and if you are putting the money at 100 rupees, so you put the money at 100 rupees, I got it at 100 rupees.
So basically it's OFS. Exit, okay. Sir, what is the last performance, sir? Previous performances of the
Ritika will
funds?
share everything. Ritika will share everything to you.
Okay.
Otherwise, somebody sitting next to you can ask the question to him. Most of the guys sitting next to you must be my investor, so they will tell you. Yes, sir.
Between your, there are different, stage of funding, like mid-stage, last stage, pre-IPO. So you are from the beginning till the end, like till the IPO level, or how it is?
Not from the beginning, sir, because then it becomes two startups. So what am I doing is that I am giving you a benefit of both the worlds. Startup में आप क्या करते हो? You technically become a first check cutter in a paper company. I am becoming a first check cutter in a 500, 600, 700 crore company where you have auditors, debtors, creditors, employees to check the balance sheet. So that's the benefit I get. You know, this is the sweet spot of both the world. That is the startup world, this is the IPO world. By the time you hit here, the valuation is obnoxiously high. But my company is not IPO'd, so I am not hitting that a big valuation, but at the same time I have a safer horizon. So that is exactly what I do. A grown-up company, I become the first check cutter. From there onwards till the IPO, I only take care of everything.
So in that case, you have a different exit level, like, mid-stage also you can have an exit, or last stage also you can have an exit, or the only IPO level you have an exit?
To answer your legal question, I can exit any point of time. That's the correct way of you are asking the question. But ultimately, everybody wants to exit on its sweet spot. And if I can handle IPO very well, where nowadays, if I can see next 3-4 years, I do not see any way market, cyclical events can happen, then might as well stick to your core competence. If you can hit the IPO, then why not? Go for it. That's your core competence ultimately. You have done it so many times. If you're confident of going for that, today India is going for a kill. They would have gone for a draw. Why they are going? Because that's their sweet spot. They are playing within their competence. I am also playing within my competence.
Thank you.
Thanks. Haan, sir.
First question is, you said that the promoter holding is 90%.
Haan, sir.
I think it is 90% before your entry. So what is their proportion after your entry? And what is their proportion at the time of IPO?
So
this is my first question.
Typically, when the IPO happens, the promoter has to mandatorily offload 25% to the public. So he has to necessarily go to 75%. So that's a stage by stage dilution. Happening first dilution at say X, second dilution at 2X, third dilution, but not like a Series A, Series B, Series C, Series D, not that, 1 or 2 dilutions only. So typically when I come, they become, most of the companies, it is either 85-15 or 90-10. And the IPO goes, it is like they go up to 75 and I get out. And the 25 has to be the public.
So that means you take around 10%.
Most of the companies, the lowest I have taken is 6.2%, the highest I have taken is 14%. Sweet spot is 10. You are observing this product very well. So whatever reports as a fund manager, investors have to give you, regulators have given a clear directions. What are the reports we are supposed to give you quarterly? What are the reports we are supposed to give you half yearly? What are the reports we are supposed to give you yearly? That entire charter has been given by the regulators. Accordingly, you keep on getting. So most of the frequency of the reporter is, I think, either we have made the investment. For example, you can check last 2 months I have given at least 4 reports. Last 1 month I have given 4 reports because I have made 4 investments, relatively faster in the world. And if the investment happen, it comes quickly. As soon as I get the share certificate, the report comes to you. Otherwise, it comes very quarterly.
Do you do revaluation also quarterly?
Repatriation means?
Revaluation of
Revaluation is a half-yearly affair. That's mandated by the regulators.
So these frameworks come into force after the first tranche of investment, or from when it is applicable?
3 months is of course from the first closing.
First drawdown.
Yeah. So it becomes the quarterly. So September, December, March, that's how we go.
I think for your Bharat Value Fund, still we have not reached 3 months after your first.
Yeah, but already 6 disclosures have gone. So because we have made almost 50% stands deployed, where just want to tell you that where the most of the people are taking 2 years to deploy the fund, the deployment has happened. Most of the people ask me why there's a faster deployment. So let me address this question, which was a welcome question to me when I came here. At least 12 to 15 guys asked. The answer is very simple. जितना जल्दी बच्चा पैदा करोगे उतना जल्दी वो कमाना चालू करेगा. The faster you enter, faster you exit, sir. आप एंट्री 2 साल करोगे तो एग्जिट कब मारोगे सर? 10 साल के बाद. 17 महीने में तो हमने कमल भाई के बैंक अकाउंट में 10 टाइम्स रिटर्न दे दिया. 17 months खुद बोल के गए आपको. I am not saying this, my investor is saying this. Half of the investors are sitting over here. If I am returning your money, I don't want to promise that every time I will do that, but if I am returning the money in 24 months, that too also reasonable alpha, I have to enter fast. Please note, entering fast, I have to openly take this statement because people are asking me to come on a call. Entering fast is a healthy sign of investment, and no fund manager will beg to differ on this statement. People are finding it difficult to enter, we are entering fast because we have avenues and opportunities to enter. Sorry, sir.
Very faster way, they don't pay up. They are not able to.
So basically, sir, it's like this. My hurdle rate triggers the day I ask your money. The hurdle rate is 15%, 1.5.
No, I'm telling, when you demand money because of these trenches, right? They come faster, demand, drawdowns. And if you're not able to, the investors are not able to put money.
Okay. Investor is not able to pay. Oh, that becomes an unhealthy situation. Technically, you becomes a defaulter. They're either the fund manager, of course, the regulators.
Investor becomes defaulter, no worries. But what happens to the fund and the growth of the company?
So simple, sir. In that case, basically, either we have a right to forfeit the money because the regulators say minimum commitment is X and you have given less than X. So technically, you become regulator's defaulter. So in that case, either fund managers forfeit the money, but to be on a friendly terms, we facilitate that you try to sell your units to somebody else. That is option is, but you cannot come and redeem the units. That's not allowed. So you can sell it to somebody else.
What happens to the purchase plan of a company where you're investing in a different business?
Not too many investors default, sir. At least I have, first fund I have 158 investors, not even one defaulter. Second, I have 999 investors. At least till today, nobody is a defaulter. I'll tell you one thing. When the fund is healthy, there is no defaulter. When the fund is not healthy, you find the defaulters. As simple as that.
Yeah, because, I mean, it's a collective growth, right?
Yeah, absolutely.
Thanks.
The maximum time for the
typically when we enter into the shareholders agreement, the most common clause in our case is that if I am entering today, we have to bring the IPO in a 30 months on a higher side, 30. That's what we enter, but that's on a higher side. So we try to keep that margin. And then the buyback and stake sale clause happens after that. So we typically say this is a 2.5 years fund, probably the shortest, one of the shortest. But from document point of view, when you'll hit the document, you can clearly see that this is like a 5 years fund. Because what regulators say that you have to talk from the first entry and the last exit. For example, in the recent fund, the people which are giving to the last installment may be January, not March. That the counting will start from January, not from today.